Imagine a world where your entire financial life fits in the palm of your hand. No more waiting in line at the bank or shuffling through stacks of paper statements. That's the promise of digital banking, and it's revolutionizing how we manage money across the globe. Welcome to the Savvy Finance Corner YouTube channel. Wealth begins with knowledge. Today, we're re-diving into the exciting world of digital banking models in 4 key markets: the United States, Canada, Australia, and the United Kingdom. These countries are at the forefront of fintech innovation, each with its unique approach to embracing the digital financial future. Let's start with why digital banking matters in our increasingly connected global economy. It's not just about convenience. It's about transforming the very fabric of how individuals and businesses interact with money. Digital banking reduces costs, increases accessibility, and enables 24/7 services. As cross-border finance and e-commerce continue to expand, the need for seamless digital banking solutions becomes more urgent than ever. At the heart of this revolution are neobanks, fintechs, and challenger banks. These digital native institutions are disrupting traditional banking models by offering lightning-fast onboarding, no-fee accounts, and mobile-first experiences that resonate with tech-savvy consumers. Fintechs are taking it a step further, providing specialized solutions in areas like payments, lending, and wealth management, often integrating seamlessly with established banks through APIs. Now, let us take a closer look at how digital banking is shaping up in each of our focus countries, starting with the United States. The U.S. market is characterized by a fascinating mix of digital native neobanks like Chime, Vero, and Current, alongside traditional banking giants such as Chase, Bank of America, and Wells Fargo, who are investing heavily in their digital platforms. Many offer hybrid services, blending extensive branch networks with cutting-edge mobile apps to cater to a diverse customer base. The regulatory landscape in the U.S. is complex, with banks having to navigate both federal and state regulators, including the FDIC, OCC, and various state banking departments. This complexity has led many fintechs to partner with licensed banks to ensure compliance, while still innovating rapidly. When it comes to market size and adoption trends, the United States leads the pack in sheer numbers of fintechs, with tens of millions of Americans now using neobank services. Adoption is particularly strong among younger demographics, but trust in traditional banks remains high, creating a unique dual-track system where innovation and tradition coexist. Shifting our focus north to Canada, we see a banking sector dominated by the Big Five RBC, TD Scotiabank, BMO, and CIBC. These established institutions have invested heavily in digital channels, offering sophisticated mobile apps, AI-driven services, and comprehensive online platforms. However, the landscape is evolving, with fintech startups like Coho and Neo Financial gaining traction by targeting younger customers with flexible, low-fee solutions. The challenges in Canada are distinct. The banking sector is highly regulated and concentrated, which has limited the rapid disruption seen in other markets. Compared to the US and UK, customer migration to neobanks has been slower, reflecting both the strength of incumbent banks and regulatory hurdles. Moving down under to Australia, we find a government actively promoting open banking through initiatives like the Consumer Data Right (CD). This forward-thinking approach gives customers unprecedented control over their financial data, fostering innovation in the fintech space. Key players in the Australian market include neobanks like UpBank, which has found success by offering a fresh, digital-first approach to banking. However, The failure of Shinja due to funding challenges serves as a cautionary tale in this competitive landscape. Meanwhile, Australia's big four banks, Commonwealth, Westpac, ANZ, and NAB, continue to digitize their services and forge partnerships with innovative fintechs. The trends in Australia are clear. Mobile-first solutions dominate. With digital wallets like Apple Pay and Google Pay seeing widespread adoption, the new payments platform has revolutionized instant payments, further cementing Australia's position as a digital banking innovator. Crossing the globe to the United Kingdom, we find what many consider the world's fintech capital. The UK leads in neobank adoption, with household names like Monzo Wallet and Starling boasting millions of users and global recognition. This success is partly due to the UK's pioneering open banking framework, which mandates that traditional banks share data with authorized fintechs, fueling competition and innovation. The result is a highly competitive environment where banks are pushed to innovate faster than in North America or Australia. Tech-savvy consumers, combined with regulatory encouragement, have created a perfect storm for digital banking innovation in the UK. So, how do these four markets compare? When it comes to adoption rates and consumer trust, the UK clearly leads in neobank uptake. The US shows rapid fintech growth but maintains strong loyalty to legacy banks. Canada lags in adoption, while Australia falls somewhere in between, showing steady digital uptake but not quite matching the UK's fervor. Regulation and innovation speed vary significantly. The UK and Australia benefit from supportive regulation, particularly in open banking laws. The US faces challenges with fragmented rules that can slow innovation, while Canada's tight regulation has limited disruption, but also potentially stifled rapid advancement. In terms of leadership, the UK stands out for innovation, the US for sheer market size, Australia for its experiments with open banking, and Canada for its cautious but steady approach to digital transformation. Looking to the future of digital banking, several key trends emerge across all four markets. Artificial intelligence will drive personalization to new heights. Blockchain technology promises to revolutionize settlements, and embedded finance will see banking services integrated seamlessly into non-financial apps, like ride-sharing or e-commerce platforms. Cross-border payments are set to become faster and cheaper, breaking down international financial barriers. Sustainability and green finance are also taking center stage. Banks across these markets are integrating ESG metrics into their operations, offering green loans and sustainable investment options to meet growing consumer demand for ethical financial products. Customer expectations continue to evolve rapidly. Today's consumers demand instant transactions, personalized offers, and seamless experiences across all devices and platforms. This constant pressure is pushing both traditional banks and fintechs to innovate continuously. As we wrap up our global tours of digital banking models, several key lessons emerge. The UK demonstrates how supportive regulation can fuel rapid innovation. The US showcases the power of scale in driving fintech growth. Australia highlights the importance of government-led initiatives in open banking. And Canada proves that trust and stability can sometimes slow disruption, but may lead to more sustainable long-term changes. For global investors and consumers, these case studies reveal where the opportunities lie. Consider investing in regions with supportive regulatory environments or in fintechs that can successfully partner with established incumbents. The future of banking is digital, And understanding these diverse models is crucial for navigating the evolving financial landscape. Which country's digital banking model do you think is the strongest? Comment below and let us know your thoughts. And don't forget to subscribe to Savvy Finance Corner for more insights into the global fintech revolution. Remember, in the world of digital finance, knowledge truly is power and wealth.